Appreciate like hope people some people come. We're gonna start in probably like a couple minutes, y'all. Ugh. Type in the chat, premium chat if you are here and you are listening. I know that let's make sure people are here. Pay attention. People said they'll come and action. Something important. One, okay. JK, Queens, ZP, Stan, Wintergreen, y'all in here? Marky Mark, what's going on? How you doing? A few more minutes. I don't know who all in here, but we're gonna just run through just kind of like how I trade SPX. I know you kind of been in a few classes, but um we'll go through it like normal. All right, first go to your 2 minute, and again, this works on any ticker uh that you can trade. They all just respond to them differently. First thing I do is um I start off with plot my fibs. So I start with the previous day, 350, 358 candle, drop it down to the 930 candle once it closes. So today would have been um a scenario 5. The reason why it's a scenario 5 is because we did not actually no, sorry, scenario 4. We closed the gap. So remember scenario 1. Scenario 1 is we gap up, hit PZ straight off, or we gap down, hit PZ straight off. Scenario 2, gap up, go. We don't hit, we hesitate in this area, which is Oops, sorry. No trade zone. Before we go hit the PZ, right? Thank you, Jay. Or we gap down, hesitate before we hit PZ. Scenario 1 and scenario 2, we never hit RTZ first. Right. So always understand that we never hit RTZ retracement zone first. We always either hesitate or we go straight to the profit zone. If we hesitate, we then go to the profit zone. Scenario 3 is that we gap down or gap up, come into the retracement zone, and then go hit the profit box. Same thing here. Hit retracement zone, go into the traffic box. All right. Now there's two different ways, or in scenario 4 is when we fill the gap. We don't hit profit zone, we just fill the gap first. Now we may hit the profit zone after the fact. The first thing we do is we fill that we fill uh the the gap. So now how to determine your profit zones or your opposite profit zones? Well, when you have a gap down, you draw from the top to the bottom. Your profit zones are always going to be your negative coefficients, right? Your opposite profit zones are going to be your positive coefficients. So profit zone 1, profit zone 2, profit zone 3. The opposite side, opposite profit zone 1, 2, 3, etc. Following mark. Now here's a perfect example. That was a gap down. This was a gap up. Now in this gap up, we go back into the retracement zone, hit PZ, which makes it a scenario 3, and then we go fill the gap. Although we still fill the gap, the first thing that we did was we went to the retracement zone and then we went and filled the profit zone. Now you see how we rejected it? A lot of times when we're trading in range, we will reject one side and go to the opposite side. We also will stay in between typically on a day-to-day basis, we typically stay in between if we don't, as long as they're a decent sized gap. We will stay between this range here. And usually between this gap, this area here. Big range days, small range days. So anytime we get to these extreme levels here, on this side within a day, you'll see us pull back. All right, go to the next day. The type of day that we have. Looks like we got a here. Some people, this can be kind of confusing of whether it's a scenario 1 or scenario 2 because we came up, we retraced, even though we started in the retracement zone, we didn't retrace back into it. We pushed out of it, came back, hesitated here, and then went to the profit zone. That would be a scenario 2. So you know how we didn't go any more past the center, this area. We didn't go any past this area. All right. Let's go to the next day, which is today. Remember, 1358. As soon as we close, boom. So now what happens, right? Every time we got out of this area, right? Oops. Sorry. This area, what do we try to do? Try to come back in, right? So honestly, you could just put, you could honestly put, I ain't gonna say you could put orders here, but if you're trading SPX and you're watching it, right? you can basically see how we react off these levels to take your trades or reversals. Definitely around key time. So right here, you got 10 o'clock. You got almost like the 2 o'clock flip here, which we got back inside. Here, 11, like around 11 o'clock. Here, around 11:45. So those key 15-minute, 30-minute, and hour flips. That's when you will see us try to get back into the range. All right. So we're gonna drop a quick little gem real quick. Might have Clayster. What time is it? 6:45. Might have Clayster check this out. Get rewarded for coming to class. All right. Your Monday fibs are your most important fibs. Why? That's where the week starts for the most part, especially for SPX. But now, one thing you'll notice is that if you go over time, right, even last week, right, we typically, so we'll do this. Anytime we get outside of Monday's fibs, and this is as long as we have a pretty decent gap on Monday. It's not a big gap, this doesn't really apply, but if we have a pretty decent gap, what you'll notice is that anytime we get past these extremes, so this was Friday, right? We bounce back into off the extremes of either -2 or -2, -3, or +2, +3. We typically like to close back inside of it. Right. So now this was this Monday's fib from last week. Let's see how we react to it this week. And we'll just look at it on the 15-minute. So here was Monday. See how we react off these fibs. Boom. And back up. Boom, boom, boom. So that was Monday. Now this is this Monday, right? This Monday, we're at the negative. We're at the positive 3.236. And you see how we're holding this? So there's a good chance that we could potentially fall back into this 2.236 if this is going to be a range week. All right. This we on them. We on like a little. All right. Now that we talked through that, how to look at my percentages. Mm, 1 second. All right. So this is where I get the percentages from. Typically, I go and update this on the weekend. So last update was on Friday from last week. So it's pretty current. So, all right. Let's go ahead and clear this out. The filters. But as you see already, right? Mondays are very high percentage. 60% is very high percentage for a AM session move. So out of what is that? 80 sessions over the last 2 years in which we've had an AM session move, which is anything over 15 points, we have moved up 60% of the time. Now let's add some news to it, right? So let's take news out. So in news, still 61%. So if we have news, right? And let's say we gap up, those are high days for Mondays to move up, right? Say if we gap down, right? We gap down, those if we have news on those days, Mondays typically tend to go down, right? Now Wednesdays typically go down on gap down days. On Thursdays, in which we gap down, we typically like to push up, right? So anytime I see this, so when I'm going through this, this is what I'm pulling, right? And so now let's look on the PM side, right? So on the down days, right, your higher probabilities are your 50, 58, 57s. Anytime it's 50, 50 or 52, I kind of leave that alone. I don't really look to that too much. It's kind of like a 50-50 draw, in my opinion. So if we do gap up, right, on certain days, see how Tuesdays, gap up days, you typically have a push up on Tuesday, right? That's important. Fridays, 65%. We have news in which we gap up. We typically keep going and we typically continue in the PM session. All right, now let's look at our news days, right? On gap fills. Today, Thursday, gap fill, we did, right? 70% chance, 71% or 70% chance, right? So in days we gap down, right? But we have news. Friday is a big day in which we typically fill the gap. Now, if we take news out, right, and we gap down, Mondays almost 81%, right? Now the other days we typically have news, so it's not that you don't really see the data points are a little less, right? Let's see if we gap up. Let's see if anything here stands out. So Tuesdays in which we have no news days and we gap up, typically fill that gap, right? 15 out of 21, 22 times. All right. So now let's look at the scenarios, right? So the scenarios, right? Anytime you see it, so let's go back. So anything over here that's 55, 57 to 60, look to take entries in that direction on those days. 75, high. And then you say, okay, it's only 12 of those, right? But you got to think over 2 years, 12 of those times, 12 of those days, specific days in which we have no news and we gap up, right? And one of those days, we continue in the PM session. Just like if we have news, right, and we gap up, on those 19 days that we have a PM session, a PM move or reversal, 74% of the time we go up. So here, anything over 60% is a pretty high percentage to me. And even though you may not necessarily feel we may not feel the gap. If it's 50, 60%, look at us potentially, you know, filling 50% of the gap. Now, this doesn't mean that you automatically just go towards filling the gap, right? Because you see these times are on average, right, are, around 11:14, 10:50, 10:46, 10:56, which means that a lot of times if you're looking at your chart, right? So let's go to this day, right? So today, right? We had one, two, did the second move, right? Here, we didn't gap fill on Wednesday, right? Now, Wednesday, I believe, in which we gap up. Wednesday is we have news, it's 63 chance, so it just was an off day, right? Now, here, this is the perfect day, right? We tried one, we tried two. The third time is when we hit. A lot of times you'll notice that on the third or fourth time is when we actually fill the gap, right? Here, right? One, two, three. Really, the third? The third time is when we fill the gap. But keep in mind when you see the gap fill time date, right? You're looking at this and you're kind of getting an idea on average when we typically fill the gap throughout the day. So don't expect us to necessarily always fill the gap early on, even though we might get some type of move towards that gap fill. It may be like a fake gap fill until later on, until basically they're just trapping people in that gap fill until they actually want to fill it, right? So for your scenarios, right? So scenarios, typically, right, if we look at this from a standpoint of unfilter it, what happens the most is we get a scenario 4 first. Now remember, we can fill the gap 1, 2, 3, and 4, but scenario 4 is in which we fill the gap first, right? My favorite trade to do is a scenario 3. Why is that? The reason why is because when we have a scenario 3, right? If I can find one. Here we go. Yeah, I think this is one. Oh, damn, what's that this whole time? Uh, Scenario 3, you can kind of tell scenario 3 because what happens is we gap up. This might be scenario 3. No, scenario 1. All right, here, scenario 3 here. Right. Scenario 3, one of the reasons why it's my favorite one is because we gap up or we gap down, we go back into the retracement zone, and then we go push up. Think about this contract, right? The contract is very expensive here. Once we get back into discount, right? Discount this range, right? So 50% of this range here, right? We typically, the contracts are a lot cheaper. Now, from this move from here to here, right? Now you're looking at 43 points versus taking 8, 9 points here. So I love a scenario 3. Scenario 3 is my favorite trade to take, especially when I'm trading SPX, right? So scenario 4 happens the most, right? Scenario 3 is second. Then you got a scenario 1 in which we gap up or we gap down, we push towards the zone without any hesitation. Then you have a scenario 5 in which typically when you have a scenario 5, if you notice over here, right? Scenario 5, the average gap is 37, almost 37 points. So anytime we gap big, right? A lot of times price will just stay stagnant in a range, and we just basically the people who made money overnight are the lucky ones, right? So all right. PZ hit, right? Now you notice PZ gets hit at a 74% clip, right? This does not mean it gets hit ASAP. Average time, right? Average time is about 10:30, right? So just keep that in mind. And with that being said, your Wednesdays on average have a higher chance of us hitting PZ more than any other day. Now, if we add some news in here, right? So let's say news, no. Friday is your leading day. We do news, yes, right? Wednesday is your leading day. Now let's say we want to gap up, right? Gap up. You got Tuesdays and Wednesdays as your leading days with news. Gap down. I wouldn't really Monday didn't have really that many data points, but I would stick with Wednesdays pretty much. The great day for that. So anything over 75% is pretty good to me, and really anything over 80%, I'm taking it every day. So I mean that's happened several times this week. I believe Tuesday and Wednesday both had 87, 85, and 87% chance of us hitting PZ, and we hit PZ on both those days. Now with OPZ, your highest days are Monday and Thursday, right? We add news into it, right? Now you got Thursday and Friday. We gap up or we gap down. That changes parameters, right? Thursday, gap up, right? OPZ gets hit 61% of the time. So let's go look at the chart, right? So what happened today, right?
Ask a question.
Yep.
What's PZ?
So PZ is this. Who asked that question? Alex G? Sorry, Alex G. So PZ is this, right? I think you might have missed the very beginning. So when I draw my fibs, right? When we gap up, I draw them from the bottom of the 358 candle the top of the 9:30 candle, the 2-minute time frame as soon as it closes on the 9:30 candle. Your
Gotcha.
PZ is PZ number one, which is pretty much your most important one. Your
Hmm.
PZ number one is your negative coefficients, right?
I see.
OPZ, right, is your positive coefficients, right? So let me mark
Got
this out, right? So here's your OPZ, here's your PZ, here's your retracement zone here.
So how do you, I guess, I'm sorry, I don't know, but how do you calculate these things? How do you draw these out?
So here is, I want you to take a snapshot of this. Go ahead and take a snapshot of that.
Hang on a second. Got it. Yeah.
All right. So those are my settings. So the calculations or like the data is basically is about 2 years old. And so some of it is objective, some of it is not objective, and I'll go through what's objective and what's not objective, right? So what is semi-subjective, I say semi because I try to keep it as unbiased as possible, is if I say we have an AM move, right? I'm
Uh-huh.
picking the biggest move at key times from specific levels, right? So if I say that, so I could have said, or I could have picked either down or up. It doesn't matter because they're about the roughly the same, right? But if we had a down move and we bounced off of OPZ, that would be a more significant move for me, right? Because you have some type of reference point of support and resistance support here. Just like if I said that the move started from retracement zone, you have some type of reference point from there. Does that make sense?
Uh, I have to review it. I mean, what you're making, it doesn't make sense, honestly, but I'm sure if I review it a few times, it'll make sense.
So I'll give you a perfect example, right? Let's see. Let's go to uh, uh, all right. Um let's go to 114, right? So from on 114, right?
Mhm.
We had a gap up, right? So we draw from the bottom of the we draw from the bottom of here, right?
Mhm.
And I'll go ahead and mark out my areas. Right? So you have your opposite profit zone here, or your profit zone here. Sorry. You got your retracement here. You have your opposite profit zone here, right? And you also
Mhm.
have another area here, as I call this my no, I call this basically my no trade zone. The reason why I call it my no trade zone is because if this area is really, really big, unless you put like a 50%, basically a 50% in here, right? You don't really,
Mhm.
this can be really, really big and you can take moves in this area and you don't really have much supply resistance in this unless you have other supply resistance levels. So I call that the no trade zone is because you need to be careful about taking trades, right? In
Mhm.
that area because you don't have anything to necessarily give you support or resistance. So it's on both sides, right?
Gotcha.
So
Okay.
now negative coefficients are always going to be your profit zone. So it's profit one, profit two, profit three, right? Now this
Uh-huh.
is opposite profit zone here, two, three, right? All right. So Tuesday was a gap up day, right? So and we had
Yeah.
news, correct? So let's go here. And this is what I put in the letter, kind of like the little letter that I have that I sent out, right?
Uh-huh.
So 54% chance of us, or 55% chance of us going up, 45% chance of us going down, right? In the AM, right?
Mhm.
So now here, right? 67% of the times that we do go up is going to be from the retracement zone. 60% of the chance that we do go down is going to be from the profit zone. So let me pull up. Give me 1 second. All right, this is what was sent out on Tuesday, or it sent out the night before, right?
Yeah.
So let's look at it from this standpoint here. So here, right? Typically the move happens on average around 10 o'clock. Now, with that being said, give it about a 30-minute grace period, right? 30 minutes before, 30 minutes after. What do? We hit the profit zone, right? Move down,
Mhm.
right? So now this is like, because of how I take the data, right? I try to make sure that it's always against key levels so that it can give you kind of like as it can be non-subjective when it comes to the moves. Right? Now, what's not subjective, right, is gap fill information. That's never subjective. We either gap fill or we don't, right? The average time we gap fill, that's not subjective. Average gap is not subjective, right?
Okay.
Right. So when we have a situation like a PM session, right? 145, there's a 74% chance that we're going to bounce off of the OPZ, right? Now, how I got that information is, like I said, data's been collected, 43% of chance that we're going to, out of all these days, right, 14 days, that we have a Tuesday news in which we have we have a move of at least 15 points in the PM session. 43% of the time we bounce off of OPZ, right? So, or we move from OPZ. Where do we move from? PM session, OPZ, right? There was 2 times where it happened, right?
Mhm.
Does that make sense now?
A little bit. I think I just have to review it a couple of times to
Yeah,
understand.
no, yeah, definitely. So now the other thing is, now what's not subjective also is whether we hit PZ or OPZ, right? We either hit it or we don't. So there's an 87.5% chance that we hit OPZ by 10:30. We hit it, or 10:27. We hit it pretty early, right?
Mhm.
So that data point is collected, no issue, right? 46% chance that we hit OPZ. A lot of times, what you'll notice throughout the day, through like just watching this, is I plot levels, right? Or even if you plot your own, right? Because you have the information now, right? Gap up
Um, uh-huh.
from the 358 candle to the 930 candle. As soon as the 930 candle closes, you plot it from bottom of the 358 to the top of the 930. If it's a gap down, you do the opposite, right? Gap down, you go from top to the bottom. So then, and the reason why is because it's important that your coefficients are at the correct area, right? So it's important that if we gap down, your negative coefficients are at the bottom. If we gap up, your negative coefficients need to be at the top. Does that make sense?
Um, it makes sense. I
It,
have to
it's
go
fine.
and
It's
do it.
kind of, yeah. It's something that you just have to kind of just go through, right? So we gap down. Remember, going from the top to the bottom, right? So here to here, right? If we gap up, right, or this would be, what would I consider this? This would be a gap up, but it's not much of a gap, right? So
Mhm.
here you would have to go into your settings, right? And extend these out if we extend past here. But typically this doesn't happen often, just to be honest with you. So gap up here, right?
Do me a favor. I have another question. I don't know how many people are on this line, and if I'm asking too
Yeah.
many questions, but
No, you're good. No. Ask away. Ask away. This is here. I'm here to give you guys the answers to like any question that you have. Definitely, if you're looking at in my channel. But go ahead.
give me a perspective of how do you trade this? What information do you use to trade this information?
So this is the idea behind gap fills, right? Typically, right, we range. But with that being said, if we gap up, we only go so far because of the aspect of how the market now that aspect of how the market works, right? Market
Hmm.
typically ranges, whether it's up or down, it ranges, but the up or down is just slight movements up or down. And you have 20% of the time in which it trades, right? So for me, if I'm trading this, right, I'm either going to, if we gap up, wait till it gets in the retracement zone and then can take it continuously. Or if the data says there's a high chance of us filling the gap, right? I'm going to look for moves to the downside, right?
Hmm.
Or what I may look for is us to hit this area, come out of it, and take it back to the downside. Same if it was on a gap down, right? So here's a gap down, right? Draw your field. We gap down, hit this area, pop back up into the range, right? And you'll notice, right, unless we have a major trend day, that typically will do that, right? Typically, if we gap up or we gap down, we typically come back into the range somehow, some way. It's almost like a rubber band effect. And your fib levels, right? Because the market is number based, right? Your fib
Hmm.
levels typically will give you will show you will react price will react to them pretty strongly.
Gotcha. And the timeline you're using is what? 15 minutes,
So,
45 minutes? What do you use?
so when I'm drawing these out, I'm drawing these on a 2 minute. But what
2 minutes.
what I trade on, right? Let me just go out here. Right. So I can plot this on a 2 minute. Right?
Okay.
Plot it on the 2 minute, right? Go to your 5 minute, see how much cleaner that looks,
Yeah.
right? So it's up to you what you trade on, right? I trade futures. So futures I'm on a smaller time frame because I'm looking for precise entries, right? So you have here, right?
Hmm.
Go to your 5 minute. You notice the reversal candles. Boom. Held this level, moved up, came back, tapped it to the T, moved back up, came down, moved back up, came down, moved back up. Right. And so
Hmm.
typically what will happen is we will stay within, there's two ranges that we stay in, right? The first range typically is going to be uh, on most days, we will stay in between here, right? Now there are some days where we get more extended, and typically it'll be these days, right?
Hmm.
Now there are days which when we just trend and then we just keep going and we keep going and keep going. But those happen maybe 10 to 20% of the time.
Gotcha. Thank you so much for that information. I appreciate it.
No problem, no problem. So that's that. Now that is in relation to this that I post every day, right? So I post if we gap up, post if we gap down, right? So the information is slightly different, right? Now, when I'm trading, like say for instance, NQ or ES, right? And I'm plotting my fibs on areas of where we may reverse, right? And this is actually perfect. So from December 16th, right? I use a slightly different one for here, right? You notice how we reversed in this area here? The reason why is because what happens is when we make big moves, right? Uh, The big boys typically like to buy when we're in discount first premium, right? So if we're coming down, this would be your premium, this would be your discount, right? If we're shorting. Now, if we move along, right, let's do the next drop, right? What happens? We get to this deeper retracement, big money loads up, come back down, right? When we come back down, we make this H here, violent rejection here, right? Now, with that being said, there's a violent rejection there. If I draw the fib on the opposite side, right? Where do you see our rejection here, right? Anytime you have fibs in similar areas in which we get like almost support, those are very important levels, right? Now, let's move over, right? And this is where like your higher time frames matter when you're fibbing, because guess what? Hit this to a T, drop back down, right? Now, what I'm expecting, right? Just an idea is that I'm going to fib on the opposite way to kind of get an idea where we may retrace. But when I'm doing this, right, marking out certain areas where I would like for us, for me, if I'm a buyer, this is where I would like to buy, right? If I'm shorting, these will be my targets. Does that make sense, Alex?
Yeah, I just put myself on mute because I didn't want to bother you. Honestly, it's a lot of information. No,
No, it's okay. The thing is just you got to draw them, right? Once you start drawing them, you'll see, right? So
exactly,
like if I
exactly.
draw
That's
it here,
what I think I need to do.
yeah, if I draw it here, right, we hit this 0.5, we bounced up, right? Draw it
Mm-hmm.
here, not as deep as not as deep of a retracement, right? 0.382, right? Let me move this out the way. Boom, we caught there, moved up. Now in this area, what do you have? You have support here, right? You have basing, right? You have consolidation. A lot of times price likes to go back into consolidation and move back up. What do you see? Right at this fib extension, right? See a reversal pattern going back down, right? Now if I draw the next fib here, right? Have a little bit deeper retracement. This time, 0.618 hits it to the T, moves up, but it runs out of gas and doesn't hit this 0.0236 because there's a deeper retracement and lost a little bit of momentum. From
Okay,
there,
so sorry.
go ahead.
So that I guess that maybe this will make a little bit more sense after I start drawing this up. But where do you get an indication that things have slowed down and you need to get out or you need to get back in? How do you differentiate this based on when you can adjust the lines in any way you want? How do you differentiate this?
Oh, I mean, it's like anything, right? It's you got to practice risk. It's all about risk management, right? So, like, say for instance here, right? Just perfect example, right? Say if I had an order here, right? Well, you have to realize that if there's going to be a deeper retracement, right, you have to be prepared for this drawdown. Or if you don't want to take that much drawdown, you take a deeper retracement, right? And then you just make your stop the next level. Does that make sense?
Yeah, I guess you give yourself a little bit of room. Okay. Is that what
Yeah.
you said? Is that what you mean? Okay.
Yeah, basically, right? So if I'm thinking that this is going to go up, right? This is going to continue up. I don't know it's going to continue up. I have no idea, right? But I do know that we're in an uptrend, right? We're in an
Yeah.
uptrend, retracement
Mm-hmm.
uptrend. If I draw the fib from here to here, right? Where did it catch? Boom, right? So now that I know that we're in an uptrend, I'm looking for retracements for us to take it back up. So I'm looking for some type of reversal pattern on in the chart, whether it's a daily, hourly, 4 hour, depending on what you're fibbing or how long you're deciding to be in a trade, right? So say for
Mm-hmm.
instance, get in here. This is an inside green candle, right? And we're hitting around the 50% level right here, right? So
Okay.
first thing you have, right, is if you don't want to get in here, you can wait until we come back into this candle, right? And put your stop underneath here, right, at this fib level because we didn't tap it, or you can put it at this level, right? So
Mm-hmm.
like normally, if you'll do this if you have time in your contract, right? Because that's a pretty big, that's a pretty hefty uh drop, right? So if I look at that, that is 64 points, right? Now it's up to you what your risk management is, right? This may be okay with somebody if they know that they can potentially make, right,
Yeah.
275 points, 391 points, 612 points, right? If you have time in your contract to get that, right? So with that being said, right? Oh, you see this inside green candle pretty strong, right? Then you see, then if you get in, like I said, make your stop underneath here or the next level, and you just live with the trade, right? And you understand your premium that you paid, right? Until you get comfortable using fibs, is that you almost have this idea is whatever spent is was spent. Right?
Wow.
Now,
Okay.
And so now, if you have a situation where we're in an uptrend and we get a 50% retracement or a 0.382 retracement, there's a high chance of us going at least back to the highs, if not
I believe.
to the next fib extension. Now, if
Wow.
we have a deeper retracement, right? We have a retracement down here, right? I wouldn't target the highs. What I would target is your zero point 0.5 or your 0.382 level, right? So if you look at it from a standpoint of this, right? If I move this here, and this is the idea of this is how much I would make, right? Or even
Mhm.
here. If I move this down, right,
Uh-huh.
it's more realistic for you to kind of shoot for this area. Let me actually do this, right here. So we move down. Don't shoot for the highs necessarily, or let your runners do that. But your meter, your contracts, you should be targeting this area because the retracement was really deep and it could run out of steam before it gets up here.
Gotcha. Wow. That's a lot of information. I don't think I'm going to sleep tonight.
No, that's okay. That's all right. So when you're on smaller time frames, right, you're going to get a lot more deeper retracements on smaller time frames. But with smaller time frames, you have to know that you have to take your profit when you get, you have to set your stops, you have to take your profit, what I mean, your risk may, not be as, you have to change your risk profile when you're trading on smaller time frames versus when you're trading on higher time frames. Because with higher time frames, if you're getting option, getting time of your contracts, you time in the contract will keep the value of the contract up, right? But if you don't have as much time, that contract can kind of bleed, right? So
Got
you kind of have to understand it. So like here, right?
it.
Here's a perfect example of another trade, right? Inside candle, hammer, push up, right? Now we hit this level, but this deeper retracement, we lost steam. Now we're starting to come back down this way, right?
Jeez, okay. All right.
It
I'm going to
works
go
on
back to you to
yeah,
let
it works
you
on any
do your
ticker,
thing.
right? So you go to Tesla, right? And here, right? At the 0.786, moved up, hit this, shot back down, right? Or if you wanted to go a little further out, and because of how the market works, you're like, I know it's the question like, okay, where do I plot them? You can plot them on any swing high, swing low, right? We moved up, big move. We caught here, now we're basing. You could have put some orders here. You have all these gaps to fill. Could have looked to fill those gaps, right? Or if you do it the opposite way, you have this swing high to this swing low, right? 0.618, we drop down, you move it to the next one, right? Swing high, swing low, hit the 0.5, came down, didn't hit here, went back up, and we rejected the 0.618, started to come back down, right? So anytime you have a swing high, swing low, or swing low, swing high, that's where you plot your stuff at. Makes sense. Oh yeah, you probably own. So I think this was one that me and uh in 33 actually looked at, and we marked it out together. So here's an example. This is what we sent. This is what I sent him on. He asked me about Netflix. Sent it to him on 12/31. From this swing low here. Was it this one? Yeah, swing low to swing high. I told him that we would probably go in the 809 area, right? We were pretty far away from the 20 SMA, 15% away from it. So if we look at Netflix, right? And I actually did this on a weekly. So we'll look at a weekly time frame, right? I think it was here. Let's see how we did. We hit 809. Oh, we hit 824. Dang, twice. Actually, what was mine? There we go. All right, yeah, somewhere around there. So got pretty close. Yeah, I think this is the week I sent it to him. We dropped down. I think we actually took. I think we took puts in this one. I think we scaled out, but uh I see its potential going all the way down to 810. So it works on different time frames. If you want to look at even a test on the 2 minute, right, and plot your daily fib levels, right. So now this was a traditional gap down and run. But you notice, right, at certain key levels, right, we respect the fib levels, right. So you just got to remember the time frame to put them on, Alex. That's the biggest thing, right? So, uh, so in my opinion, right, learning how to actually mark them on the chart is the most important part. Once you mark them on the chart, you pretty much are going from there, right? And I think it's AMD, right? We capped up. Let me actually make this precise. We capped up. Hit profit zone. Boom, right? So I think I even and this also works on premium charts, right? See if I can I have to show you a little later on that. But even on your premium charts, you can plot fib levels. Alex. Any questions so far? Any additional questions I'll ask?
Thanks a lot.
No, no problem. No problem. Let's roll through some charts real quick. Let's do this. All right. So let's go to a daily. Let's go to an hour. Run through something and see what we got. Actually, let's do it daily. Think we got anything good? I know something good. Anytime you see something like this here, right? Wick above here, open with a gap, strong reversal pattern. It's FY. Let's see if I can find another one. Like they got too many up. Here's this is one here. Open inside. Boom. See if I can find something good. We can find something good real quick, Alex, since we trade. But tomorrow, I'm gonna just fly through these real quick. Nope, that's not good. One thing I like about it is already coming down. I didn't know the gap took that much. 583, 583. Like this would have been a good one here. Oh yeah, here's a good one. It would have been good. Damn. We missed all the good ones. HG was a good one. Fuck. Here's my language. So I don't often trade options as much as I used to, Alex, but when I do, like here, this was a very strong move for ADP. So I look for very strong moves to so what you want to do is you want to catch it here, right? Boom, as soon as it's closed, you take it. You just go ahead and take it. The momentum
This
is
might
already.
sound really stupid, but how do you catch it there? What do you use to? What are the indicators? What do you use to catch it there?
No, you know, I mean, there's no indicator, right? So if I take, so I only have one indicator on here, which is here, right? It's basically um, a standard deviation indicator, right? But I don't even need it. I can just kind of eyeball it, right? So what I look for is you have a situation where, let me see if I can find a good one. Find like an actual good one. So here, right? In this situation, we had a low. We opened inside the body of this candle, but we wicked up this candle.
Mm-hmm.
Then we had a gap up, right? The next day, so on this, as soon as this closes, you just go ahead and take a trade, take it about a week or 2 weeks out, and you live with it, right? And so this one we opened up here, came down, ended up going up. So typically, right, you'll see it in situations. Let's see if I can find it. So that's what you look for. You look for that type of setup. Let me see if I can find another one. So here, right, you have this. We have a wick that clears out all this, and then the next day we gap up. Big move. All right. So what you typically look for is a wick that clears out everything, right? And then you look for a gap up the next day. So a move up or move down, a move up, in which the wick clears out everything, and then the next day you look for a gap up, or you look for, in this situation, you look for a gap up. Next thing you know, you have this big move from 167 all the way to 184. You have that in what? From November 21st to November 27th, you have a 15-point move on ABV.
Hmm.
So this is what I use when I used to trade options for real, for real. This is what I used to do. So here, boom, here's a perfect one here. Bang, swept that, gapped up, big move.
Okay.
Even this situation here, right? Swept this here, gap down, even though it pulled back up. I usually don't like when it pulls back up, but you still were kind of good because if you wanted to, right, you could have got in at the 50% level. You know how we talked about premium
Mm-hmm.
versus discount, right? So it's your premium price if we're shorting, it's your discount. It could have got in here, right? And then just set your alert, right? Say, okay, if we get back to 50%, right, and we did this part, taking it down, right? And so from here to here, right, looking at 28 points on CS in a couple of days, it's not bad. QCOM was pretty good, right? So you have, even if you went out a month, right? So
Mm-hmm.
say if you got in, so say if you had this situation, 7 points. Yeah, you went down 585, but you could have, right? You could have, which what could you have done, right? Throw that on there, boom, take it back up, right? We never validated this low. In this situation here, right? Perfect example, right? Boom, gap. What do we do? Came on down. So
Well,
here, perfect example, right? We got everything here. Gap up, right? Yeah, you had this drawdown, but if you go a month out, right? Live with the results. I wouldn't say size for zero necessarily, right? But like J&J may be a good one, right? We cleared out all this, had a gap up, and that gap up, right? 360, right?
um,
And J&J and something that moves fast. So perfect
yeah. I
example
gotta
here.
run out for a few minutes. I'll be right back.
Yeah, no problem.
Hey, real quickly before I go, what
Yeah.
other indicators do you like to use when you traded options besides the standard deviation?
So, let me go. Let me check to see which ones I can actually give out. Some of them, they're proprietary to people who I've had. I test indicators for people, so I can see which ones I can give you. So here, if you want. So one of them is the Z-score indicator here. Reason why I
Z.
like this Z-score indicator, because basically what it does, it looks at. So I use it on different time frames, but what it does is when things get move away from the mean, it gives you a signal to say that hey, we're too out, we moved too far too fast, and it's time to basically come back to the mean of where we're at, right?
Got it.
So if you draw a line, right, from here to here, right, Anytime we get too far away from that line, right, we like to come back to it. That's the simple way of looking at it.
Okay.
So another one I use is, I think this is it. Is that it? No, it's not. 1 second. Let me see if I can pull it up.
Okay.
So here. This is another one I use. It's about the dip, basically. So anytime the green is above, anytime the green goes from the green, yellow, and red go from the bottom, and the green is on top, I'm looking for calls. Anytime the green crosses below the red or the yellow, I'm looking for puts, and it crosses from the top.
What is that one called?
It's called buy the dip.
Buy the dip. Okay.
So yeah, and so yeah, so now what you have to be worried about is when we are in a situation like today. And so the higher time frames are always better to use certain indicators, and this is one of them. So you have a situation where uh, was it here? Here, right? So unless you're a scalper, right, you can get caught up in this price action. See how it's right? But you see, as soon as the green crosses over that red, what do you get? A big move down, right? As soon as you see the green cross above the red, and then the yellow in the middle, red, and we move up, big. Same thing here, right? So you look for the crosses to happen after it's been on one side or the other. You don't want to trade the crosses in the middle.
Okay.
So you want to see, yeah. So I can send you this. I don't know if it's that I because some of these. So what happens is source code is subject to terms of yeah. I'll send it to you.
Thank you so much.
And so
Thanks.
those are my main ones that I use that I can like share. Some other ones that I can't share. This people I'm testing them out for people, but those are the main ones. Other than that, I'm a statistical trader, right? So one of the things I do is that, for instance, I look at for NQ, RTY, ES, right? There's openings, right? Hourly opens or 30-minute openings in which we touch the hourly open within a specific time frame at a specific strike, a specific probability over a certain amount of time. So, right, these are basically probabilities of us hitting 9 o'clock between 9:30 and 12 p.m. over the last 400 to 800 sessions, or 400 to 1,000 sessions. Some of these are 400, but most of them are 1,000, right? So when I'm trading, right, and we get too far away from an open, right, I may start looking for an entry back up to hit this open during this time frame. So I'll give you an example, right? Let's see if I have this up still. Well, we gotta erase it all. Hold on 1 second. All right, so let me do this. So let's just look at it from a standpoint here, right? What do you notice from 11:30 to basically 15? Basically, here. Let me from here to here. What do you notice? Would you call that a range?
Yeah, from the bottom to the top, in the middle, yeah, I kind of call it a range. Yes, yes.
All right, let's move to the next day. Yeah, it's a short day. All right. Look at this from a standpoint of from 11:30 to what's that? Would you call this a range?
Not well. Yeah, the green is a range. I see the green as being a range.
So when I say range, this is just to be more specific. Range is when we basically go from one side to the other, back to the other side to the other side, right? So
Yes, yeah,
like
I
this
see.
kind of, so this would be the range here if we spread it out, right? And this could be right because we go up, come back down, right? Now this here, right, from 10:30 to here is a better range, right? We come down,
Yes.
come back up, come down, up. So what do you know? What do you notice here, right? You notice that from here to here, we have an opening here, we have an opening down there, right? So we go sweep, we go up, create openings. What do? Go close those openings. What do we do to these openings? Go back and close those openings. When you go back to these openings, we go back and close them, right?
Mm-hmm.
So same
Yeah.
thing here. Right? So today, right, and this is I'm a range trader for the most part, right? So
Mm-hmm.
if we look at from here to here, right? What do? From here, 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 right?
Mm-hmm. Wow,
So
that's a difficult one to see, but when you pointed it out, I see what you mean.
so let me actually I'm gonna mark it even more, right? So you got your uh you got your 10, 30, you got your 11, you got your this one, you got that 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 one, and you got that one.
What time frame are you using?
So I use all time frames. So I mark my chart
This
for
one.
an hour, 30 minutes to an hour, but then I go down to like a 2 minute or 1 minute to make my trades.
The
So
one you were just doing, what time frame was that one? The chart that you
oh,
were just doing.
30 minutes. And the reason why I did
Wow.
30 minutes is because those are the openings that I'm looking for, right? I'm looking for all these openings to be hit, right? Now, what does that
Okay.
look like? Does that look like we hit all the openings?
Absolutely. Now it does. Yeah.
So
Wow.
let's go. So if we start here, right? You got your, and let's do this. Make it even better for you. We're gonna plot every 30 minutes. We're gonna plot a all right. That at 10:30, right? I'm
Mm-hmm.
expecting to I'm expecting price to hit it between 11:30 and 3 at a 71% chance, right? I'm
Mm-hmm.
looking for the trade between 11 and 3, right? So here,
Mm-hmm.
we move up, start getting my reversal. What am I doing? Right? I'm taking this back down to this area, right? Now,
Mm-hmm.
the next one is here, right? 11 o'clock. Or yeah,
Mm-hmm.
11 o'clock. I'm expecting us to hit that between 11:30 and 3:30, right? What time is it? 12:26. What happens, right? Did we hit it here? We did not hit it here. They faked us out, right? We wouldn't start looking for it until 11:30 though, right? Because that's the window, right? From this window, we drop down, right? Because we're actually hitting this one first. What do? We come back up. Now, what do you notice here?
Um, Let me
Let
zoom in a
me,
little bit.
let me circle here. What do you notice here?
Um,
We go from the bottom. The green crosses over, right?
yeah. Oh, okay. I see where you're talking about. Okay. Yeah, the green crosses over, goes down.
So now, in the midst of us going after the 11 o'clock, right? We have this 11:30, right? That needs to be hit between 12 and 4, right? Well, if it's a 77% chance of us hitting between 12 and 4, we're way down here. For us to hit that, we got to come back to it, right? Price comes back to it, and right at 12 o'clock, what happens? We hit that first, right? Boom. Now you got.
Can you do me a favor, please? This this indicator of FIB lines that you're using, I guess it's called FIB lines, that you show where the trends are going to be or where they're supposed to hit. Can you send me that indicator as well, please?
Oh, so this isn't this right? You talking about this?
Yeah, I guess, yeah.
Yeah, so that right there isn't an indicator. What I have is I have this sheet that tells you. So you can I can send you this sheet though. I don't have any problem with that. And
Oh,
actually,
wow.
I think it's in my channel. So I'll tag you in it so that you know where it's at.
Thanks.
So all right, so because we're so far away from here, right? And it's a 77% chance of us getting there, price has to, if we're gonna hit it, price needs to start moving that direction. We hit it, right? Now we still have this 11:30, right?
Uh-huh.
So let me show you something else, right? I'll mark here this fib line, right?
Mm-hmm.
Where is that place us, right? Right in this little fib area.
Yeah.
Now, let me show you something else.
Wow.
Where did we reject off of? 50%. Where do we go to? Hit the high, knock out this 11. All right, right? So now we knock those out, right? We knocked this one out. You still have this 12 that we're looking to hit at 12:34, between 12:30 and 4 o'clock. It's 12:30. What happens? We start to make our way down, right? So now
Jeez.
all of them aren't going to always get hit. That's one thing you have to understand, right? So this
Yeah.
12:30 never gets hit, right? So let's go mark out at 1 o'clock. All right. 1 o'clock has a 72% chance of us hitting it between 1:30 and 4, right? So from here, I'm not looking as soon as we get at 1:30 for us to hit it, right? The reason why is because price can take you on a merry-go-round. But I'm looking for price to get extended from it from a risk to reward standpoint. Would I rather want to get it from here or get it from here? Right.
Yeah,
Now
second one.
sometimes it will be close, right? Just like this was I think this one was pretty close, right? This was all of 23 points, right? If you think about how price moves, right? If we're gonna range, when it's time for this window to open up, right, I'm going to start looking for price to kind of go back towards it. I just got to find my entry, right? And that entry, your entry is on you, right? You have to figure that out. So
Yeah.
if you have here, right, this buy, I got this buy area here, right, crossing up, right here, boom, right. Not only do I take out, not only am I fishing for this because this is further away, I knock out here, right, between two, right? Think about it, 2 o'clock. What do? We move towards it, right?
Yeah.
So let me do this. Let me just mark them
Wow.
off for you. You see. So I think this is 2:30. This one is 3 o'clock. All right. So in the midst of us hitting that, what happens, right? What do we do? Where do we go back to? Discount. All right.
Mm-hmm.
All right. In our midst of us going back to discount, right? This time
Mm-hmm.
frame hasn't opened. This time frame hasn't opened yet for the 231, even though we passed it, right? So I don't count it until we actually open up in the time frame, because that is what my data is referencing, right? My data is looking at when do we hit it between 3 and 4:15, right? Not 2:52, not 258. From 3 to 415 is when I'm expecting to hit it, right? At a 67% chance, right? So I'm not targeting this. Right? So once we move past it, right? We move past it, where do we go? We hit our 1 p.m. Now it's 3 o'clock, right? The 3 p.m. hit at between 80 and 83% chance, right? Sometimes it's 83, sometimes it's 80. It just depends on what type of run you go on. What happens? Price moves up after 3 o'clock. Now, what do you notice at 3 o'clock, right? You have this one that hasn't been hit. You have this one that hasn't been hit, right? What do you get? You get an SZ. What do you get? The green crosses down the red, all the way to the bottom. So you see this, right? This was 8.75 points. That's this icing on the cake. But you got to know that it's like domino effects, right? If this is 67% chance, it's a 71% chance, right? 93 points, right? From here to here, right? So you got several areas of confluence. You got this drop down in here. You got this. You got the percentages. So that's how I trade. So when you see me put in percentages and stuff like that, that is where I trade using. I have my entry. I have some indicators, but the majority of what I can trade without indicators, without anything, because if price gets too far away and there's a 70% chance of us hitting it, right? I'm going to start looking for entries back to that way. And then if I have indicators, I'll use the indicators to help me, right? So if I put a moving average on here, right? And typically if I use a moving average, it's a 20 move. It's a simple moving average. And it's going to be a 20 close. What do you see? Boom, moved up, bounced off. What did we bounce? Discount, right? Moved on up. What do you see? On down, boom. What do you see? Right? So
Wow.
what I challenge people is when you put together a system, right? You make sure it's complementary. Right? You make sure there's something that you can understand and it gives you your edge. No one else's edge, your edge. So, like I said, I use statistical data, so I can tell you, right? So the other thing is, like when I'm looking at this, and this is what I won't give you, right? I won't give you this because of the fact that I want you to go ahead and do your own type of, your own. Uh, you'll get all this, right? You'll get all the summary. You'll be able to see which indice does the best, right? Last time I updated was 1228. Yeah, 1228. So it's pretty updated, right? And it doesn't really change at all. So you'll get all this, right? And I'll even give you this, right? I'll even give you this to start off, right? And so now this tells me, right, that on certain if the last 10 days were 50%, right? And it's supposed to be 74%, that ain't really been doing what it's supposed to be doing. I'm expecting us to hit that 50%. If the last couple of days, if it's supposed to be 78.8%, and we're doing 50% on the last 10 days, right? Then I'm expecting it to basically hit. I'm expecting it to go on a nice little run. Does that make sense?
That makes sense. All right. Thank you so much. I'm gonna have to run. I would love to do
Yeah,
this one
no,
more
yeah,
time.
yeah, no problem, no problem. So
Thanks.
let
Thanks a
me know.
lot.
I'll make sure you get the information that you need. And thank you for attending class. If you need anything, just let me know.
Thank you. Thank you.
No problem.